Good morning, traders. It is Wednesday, February the 6th. Taking a look at the charts. To start off with Roku, we're still long Roku here. It's a relatively fresh trading stock, started back in late 2017. Overall, the market it's still holding up, looking really good. It's got strong on-balance volume. You can see this blue line here is the on-balance volume, so it's pushing to some new highs. And this type of price action we're in right now, with this kind of never-ending green bars and upper wicks where it gets sold down, very similar to what this type of price action is here. So we're looking for this to kind of have a blow-off potential top somewhere up. There is potential for it to reach up to the 63. 51 is our first target here, and where we expect it to try and run to. And we're looking for 63 somewhere up here. So we could get into this volatile price action. You get these big upper wicks, you get into some big whipsaws, but it might chop its way all the way up there for that move. So that's what we're looking for there. Overall, we'll need the equities market to continue to hold up. And if we take a look at the SP 500, it continues to stretch on the weekly chart. It had a couple weeks ago, it took a pause here and is extending up this week. Overall, volume is starting to fade as it gets up into resistance. You can see we've had high volume over here for the selling. And more or less, if we were to just look at this price action, you can see here we had relatively elevated volume here while price declined. And then as price kind of rallied up, we saw the volume kind of, it was much lighter volume. And then, of course, super heavy volume in the decline. And as volume is fading off as price rallies up. So we're continuing to kind of run up here, but we're starting to run out of steam and we are getting close. This upper range here, when it does get up here, we could see a very sharp pullback. And the big question is, will be, are we going to have a double dip? Are we just going to have a little washout here and then see prices continue to move up and go to new highs? What is going to happen? And that's where we're at. This is a big turning point for the market. More or less, a lot of markets have broken down in a significant way. Looking at the monthly charts, it is a significant type of topping formation and price action that we've had, very similar to this type of price action over here where we start to break down a significant pivot low where price crashes down and breaks through it. We had the similar price action over here, and of course over here we are also struggling with this potential significant breakdown where it's broken through it. It's kind of recovered back up, but it is under the midway resistance here. It could still continue to move up a little higher, but overall, there's been a lot of downside damage done, and this could very easily roll over for a double dip and then go into a full-out bear market. And a lot of leading sectors, transports, have been small caps. So all the major indexes have broken down and they're stuck under some pretty critical resistance. Now, we did have this once before over here where the market did break down through it just short term. Trump got in as a president and things took off. We were on the verge of a rollover in 2015, but the market recovered and took off to some new highs. Obviously, a lot of new tax benefits put into play there. Presidential cycle, the first year is usually a very strong year. So we're flirting with a very significant level here where this could roll over at any point here, and we could go into a bear market. So it needs to either regroup and muscle itself up and get into a bull market, get back up into this range, and continue to climb this giant wall of worry, or it's going to roll over, and that's where we're at. So big potential turning point for the overall markets, and things could get ugly for a year or three if it does roll over, and that's when we really need to change the strategy to be protected or to profit from the falling markets. Now let's just go back to the daily chart. Take a look at the chart of bonds real quick. Money has been just kind of holding tight here in bonds. Obviously, it's been under pressure for a couple of years, consolidating in this area. Now we're back through flirting with this area. We did poke to some new highs, but it's had a nice run, and now it's going to consolidate and potentially build a launch pad. If the equities market does start to roll over, we're going to see bonds most likely go up as the safe haven play. So they're holding their ground as investors kind of roll in there. Same with utilities. Utilities are seen as a safe haven. They are moving up. Actually has a pretty bullish formation. More or less in November, December, when the stock market crashed, we saw utilities move up as a safe haven play. We did see it correct very sharply at the last little bit there. It came all the way back down, but typically these are seen as a safe haven play, and I think we could start to see these kind of outperform going forward. Taking a look over at precious metals real quick. Let's go to the dollar first. The dollar continues to hold up. We do have a series of higher lows, higher highs. We got a low, significant low, significant low. We've got a high, higher high, higher high. So it is still slowly kind of working its way higher. If it starts to break down through this level, if we start to see this break down and it breaks through this level, then it could be a much more significant decline in the dollar. But we need to, if that doesn't happen, we're going to continue to see this, see precious metals struggle for a bit. The breakdown in the dollar will definitely signal a big rally in precious metals. But at this point, the dollar is down at support. It's trying to build a little base here, a little W formation. If it breaks out of this, it's probably going back up to these recent highs, which will put some downward pressure on gold over the next few weeks. And then from there, the big question is, will the dollar break out to nominal new highs, or is it going to roll back over? And really, we just have to take it one bar, 1 week at a time and analyze the markets. Taking a look over at gold and silver. Gold down 0.1% this morning. Let's just zoom in a little bit here. A little bit of a bull flag here, consolidating. If we look at silver, down 0.5%, consolidating. Still, we feel as though that we're going to see precious metals pull back a little bit more. Everything has moved up to resistance. We could get some increased volatility and see prices pop to new highs and big sell-offs and gaps. It could get very choppy. But overall, we are expecting price to be soft like that or to go lower, which is why we got out of our GDXJ. Got a GDXJ right up here near the highs. It's pulled back. It's flirting with these levels, but it is set to gap down percent or two this morning. And we'll see if it can consolidate again. If we look back at precious metals in general, we're seeing metals and miners all trading up in this high volume resistance area, and things are going to get choppy. We could see a blow off top and choppiness, but overall we are looking for some type of multi-week correction in precious metals as it consolidates and tries to get through this high volume level in the market. Looking over at energies, natural gas up 1%. Again, we're looking for natural gas to come down and tag this pretty significant level, this 250, 258 area. This line on the chart, if we go back in time, actually it's best seen with the weekly chart. You can see this is a very significant level on the chart where it has been tagged multiple times, broken through, tagged, broken through, tagged. It's just a very significant level on the chart. We're getting close down to this level. Each time we've seen it more or less hit there or break through it, we've seen a very strong 1 week to a very strong multi-month pop and rally. You can see some of these rallies have been very strong. And that's where we're at. We're getting back down to this level. If it comes down here, we could very easily see it pop up to the 3 level, potentially even go up to the upper end of the range, which is around the 350 area, which is right across these previous highs over here. Looking at crude oil, down 0.3%. Again, it's at a very significant resistance area going back on the weekly chart. We've got a little consolidation here. Price got close to it here, broke through it, gapped down below it, and then fell. We found a long support level here where it tagged a couple times, broke out and tagged it. We had a candle bar here where it came down, tagged it, bounced, kind of ping-ponged around between these two levels, and then broke down. And here we are now struggling at this resistance area. So we could very much so see crude oil pull back or consolidate here. I do feel as though it's going to be weak for potentially a couple weeks. But overall, I do expect commodities to perk up a bit going forward, and I think we could see it work itself up into this 58, 60, 61, 62 area before it potentially rolls over and potentially goes back down into these mid-30s going forward. Last but not least, let's just take a quick look over at Bitcoin. Bitcoin continues to be under pressure. This is the weekly chart. Obviously, very clear downtrend. Lower highs, lower lows. It continues to just kind of grind lower, which this is the type of price action we want. We want to just continue to fade and slowly pick up speed to the downside. Eventually, we should see a sharp bottom put in place and it could take off. But overall, this is more or less a dead play at this point. Really, if you look at the daily chart, um, you can see here we're on the verge of another drop, probably back down to this 3150 area, very close. If it breaks this support level, these two pivot lows here, then we're going down probably into the 2000 mark lower. So that's where we are with that. Anyways, that's it for now. We'll talk to you in a little bit. Bye-bye.